Good morning, good afternoon, good day. Welcome to my midweek market meeting, 5th May 2021. I'm Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live stock and market analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter page Sagar Nandi. You are most welcome to make use of them. I share the stock analysis that tend to be high probability trades. Why so? Because I try to align forces from the market level, sector level, industry, fundamental level, as well as seasonality with my trades. I'll explain how I do that using visual systems today also. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. The Q systems that I use, they are these systems covering technical analysis, fundamental analysis, sector analysis, market analysis, and also seasonality now. They run on TradeStation and Metastock platforms. Let's continue with the live system. I'll be demonstrating the latest Q seasonality programs. There are two programs. One is for looking up seasonality for a single stock. Another is to look up seasonality of multiple stocks at the same time. When to use which one? That depends on the workflow. If your initial workflow is, for example, top-down analysis, then you start with market level, then you go to sector level. You check industry rotation, you find fundamentally strong stocks, you look at technical charts to confirm a setup, and then you want to check the stock seasonality. In that case, you will use the single stock version to look up a stock's seasonality. If you are using bottom-up approach, then you may start with technical scan that can be using Q Finder. Let's say the bullish stocks that came today with different technical signals, that could be your starting point. Q Finder, this program is based on Metastock. If you are using TradeStation, then you may look for technical signals based on radar or sonar on TradeStation QLA, or you could use TradeStation scans also. That is the bottom-up approach. You start with technical scans, then you confirm the trade setup using technical charts using QElite or QGlobal. Then look up the stocks fundamentals first, and finally confirm the industry strength. That is bottom up. In this case also, lastly, you may check the stocks seasonality using the single stock Q seasonality program. I have named it Q Season, SEASON, Q Season. Now, if your workflow starts with checking the seasonality of multiple programs, then you will not use the Q Season program, you will use the Q Seasons program. The Q Seasons program allows you to start with the seasonality of multiple stocks, check which ones are the strongest in the current month, for example. Usually you would check for strong seasonality in the current period. So you might look for it in the current month, or if the month is ending, you might look for seasonality in the next month. That is seasonality first approach. Once you have the table populated and all is done in real time, you may use the smart filters to check the strongest bullish seasonality or bearish seasonality, and then you may check their fundamentals, and after that industry rotation you might check their technical charts using technical chart here, using Q Global or using Q Elite Radar, or you could use Q Finder. So these different workflows are possible. If you are top down person or bottom up person, then you may not want to open Q seasons program. You will just open Q season singular, not plural, Q season. And if you are using seasonality first, then you will use Q seasons. Both of these programs are integrated with the rest of the Q systems, and they are available for download from your personalized download page right now. There is also integration from the other Q programs to Q seasonality. Those are not released yet. These additional smart action buttons that are available in Q Vital, Q Edge, Q Index, Q Finder, everything, all the other Q programs to Q season and seasonality using this single button, that will be released soon. I am testing them out. I will be using them today, and you will see intelligently, depending on whether Q season or Q seasons is open, the integration sends the symbols to the right program. And in case you have both the programs open, that is Q season as well as Q seasonality, then it will intelligently decide which one to send to. How it will decide? It will decide based on whether there are multiple stocks in your review or only one stock. I will demonstrate this today, so I will carry out the market analysis little bit faster. Let's do that. Let's look at the market first. Let's start with, okay, I have E-mini S&P 500 futures here. Let's have a look at that. In the last session also, I pointed out that there were multiple bearish headwinds and bearish indecision at the top in S&P E-mini 500 futures, and I suggested caution. That was in the weekend market roundup. After that, on Monday there was another doji candle, and Tuesday the market dropped, but it recovered by the end of the day. The last candle is today's overnight market. In the weekly, so far we are again having a doji candle. 3 doji candles in the week in a row. That is extreme indecision, and that is happening at the top of the market. Let's look at the USA market instruments while I am at it. Let's look at QQQ. Change all charts in layout. Nasdaq created a false upside breakout at this watermark level that I mentioned of, the possibility of that, because QQQ was late to make a new all-time high in this area. Then it displayed bear release again. It displayed indecision at the top again. In the weekly, it had indecision candles, 2 in a row, and this week price dropped as I anticipated. Now yesterday price recovered at the close of the day, and you can see that happened right from the trend line support. If you had taken a short position earlier, maybe using fine-tuned chart on this day, you could book profit right at the trend line support without waiting. And if you kept an eye on the trend line support, you would know the likelihood of price bouncing up from there. Yesterday, you would not be surprised. You would not look to news media channels to figure out why the market was suddenly reversing. There was strong support for QQQ from this memory trendline support. And if you look at Dia was moving inside the range, and you can see Dia also precisely reversed from the trendline support. So it was no surprise, at least to Q traders, that price would find support there at that time, because multiple market instruments had memory support at that point. And IWM, it also came near the trend line support at the yellow direction line and bounced up from there. Now if you notice, IWM is moving in a range now bound by trend line resistance, trend line support. As I mentioned in the last webinar, when price of IBM was underperforming, I took a long put vertical bearish trade at that time, and that gave me significant profit at yesterday's low. Looking at the trend line support and yellow direction line, you could book at least partial profit. I mentioned I did have a bearish position in Dia also, using again long put verticals. It is in a small loss. It is continuing to move sideways. If it breaks out to the upside, I will close the bearish position, put vertical position in Dia. I'm still holding on to that. Now Dia, IWM moving sideways. Let's review QQQ again. It is back inside the range formed by trendline support, watermark resistance. So it is also moving sideways. And SPY, this is the strongest one. It is in an uptrend, but it is stalling at a high price level. Other than SPY, the other market ETFs are moving in a range. And now let's look at the global markets. You will see many of the global markets are moving inside a range. And that is not true only today. In the last couple of webinars also, I showed that they were not as strong as the USA market. They were not bullish, not moving in solid uptrend. Earlier they are doing so, but in recent webinars I showed they were moving sideways, and USA seems to be catching up to that. Let's start with the global market, starting with Australian index AXJO. Last couple of days or maybe weeks, it is moving in a narrow range. Overall, it is in an uptrend, but for swing trading purpose, we are interested in the last couple of days or weeks, and it is moving inside extremely narrow range in the last couple of days, weeks. Japan Topix Index, similar to IWM here, bound by resistance memory, support memory, moving inside the range. In the weekly, after displaying the bearish headwind, price is continuing to drop. That is why we keep an eye on the bearish headwinds. Topics range bound, China's CSI 300. Now it is also inside resistance memory and support memory. There are other support memories below it, also moving inside a triangle pattern. Interestingly, the weekly memory that I pointed out to right when price dropped to that level, that is still holding. In the last couple of days week, it is starting to move sideways. FTSE index UK market. Same story, last couple of days, weeks, it's moving sideways. Interestingly, once again, the bearish headwind caught the top of the recent up move. And lastly, India's Nifty 50 moving inside the range, bound by resistance memory, support memory. Here again, the bearish headwind caught the top. That is why we keep an eye on it. All the market instruments, 100% of them are moving sideways, and in USA market also, other than SPY, all the other market ETFs are moving sideways. This is not a market to take many bullish trades, though you may be able to find long trades like I shared recently, and let's look at them first. I already talked about the two, you can say, hedging positions using put verticals on dia IWM. IWM has profit, dia has a loss for me. IWM's profit is bigger than dia's loss. Other than those two, I talked about AVGO. I shared a long idea in AVGO probably on this day. I was aware of the trendline resistance. This trendline resistance was there at that time. The closer trendline resistance formed later. In any case, price reversed and there was a trendline support somewhere here. That support was broken at this point. So I exited the long position in AVGO with a small loss as per plan. When I took the trade, the industry was strong, and AVGO Broadcom is very strong in terms of fundamentals. Fundamentals are very strong. Industry was looking strong, so I took a long trade and I planned for exiting the trade if it broke below the trendline support, which happened, and I took a small loss and exited. Now, when I exited the trade, I noticed the semiconductor industry is very weak. Let's check them out. Let's start with AVGO's fundamentals also. I'm using Q Vital, this program, for fundamental and peer analysis. It is retrieving data in real time from Zenith or Icon, Refinitiv Icon or Metastock Zenith. It's in semiconductors industry. Let's check the industry strength. For industry rotation and sector rotation, strength weakness analysis, I am using Q Edge. And you can see now the semiconductor industry is very weak. If I go back to fundamentals, fundamentals will be very strong. It is still retrieving data. Now what I did when it broke below the trendline support, let's go to Q Elite and show the memory support here, historical memory supports, daily chart. When it broke below the memory support, not only did I take a small loss and exited my long position, I took a bearish position using short call vertical. I shorted the 460 strike call and I bought back 480 strike, and I exited AVGO, entered the bearish position right when it was dropping below trendline support using Q fine tune chart. And by yesterday's close, this vertical trade has 30% of max profit. At the low of the day, it had, I think, about 45% of max profit. I sized the trade, or you could size the trade in a way that the small loss that you took in the stock trade, it could be recovered from the short call vertical. I took a short call vertical because also I saw that I was selling higher volatility. 460 strike had higher volatility. I sold that. Then what I was buying, 480 strike had lower volatility. So I aligned many things in my favor. Not only did it give a confirmed breakout setup, but I also had the volatility in my favor by taking it as a short call vertical trade. I'll keep an eye on it. Yesterday it closed with a long lower tail just like the market, but I can see in overnight market it is down again. If it goes back up, then I will make sure that I exit with a small profit. I will not like to turn this into a loss if the market starts to rally and AVGO starts to rally. That is how I exited AVGO and also recovered much, if not all of that loss from a vertical bearish trade in the same stock. Now, is it Q guideline to short a stock where we stop out from a long trade? There is no guideline like that. Whether we take a short trade or not in any stock is decided by whether that stock gave me a confirmed setup. It does not depend on whether I had a long trade or not in the same stock earlier. It's just based on whether I have a confirmed short trade setup, and that came at the time yesterday, day before yesterday actually, day before yesterday it came when I had the breakout. Now its fundamentals were strong, and I have mentioned earlier, if at all I am flexible on one of the dimensions of 360 degrees analysis, that is on the fundamentals, and that is also mostly on the short side. In this case the market was looking weak, the industry was weak, I showed that. Technically it had a short setup, so I was comfortable taking the short trade. It had nothing to do with the fact that I just exited a long position with a small loss. It's only based on the fact whether I had a 360 degrees trade or not. Another trade that I discussed was on Diageo. That was based on the bearish headwind, and at that time it was also giving a breakdown. If I again look at the chart template that shows the historical trend lines, you can see this trend line support was broken by the bearish shape candle that also displayed the bearish headwind. So that was a breakout come headwind setup, and that short trade is still in play. And I discussed a long setup on CYH. I shared it on my website sagarnandi.com. The long setup came on this day when it gave a pullback setup plus a go with flow long trade setup. It regained the white direction line. It regained the yellow direction line. White direction line was below it. So it had a pullback setup, and the daily was in cyan color. Weekly was also in cyan color at that time. The stock was in an uptrend. Therefore, it gave a go with flow long setup as well. And last 2 days, you can see though the market is weak, this stock has rallied. It has probably covered the risk distance, and you could book profit in the trade. Today also in the overnight market, I can see it is up by another 6%. 13.25 is the closing price. So it is coming very close to the upper boundary. Certainly at that point, Q traders would book at least a partial profit. They could also book a partial profit yesterday itself if they entered the trade at the close of the signal day. Overall, these examples show that whatever be the market condition, Q trades tend to come out with profit more often than not. Why so? Because we are aligning forces from multiple levels and we are doing that in real time, not after end of day. You could do it after the close also, but we have all the systems running in 100% real time using seasonality. Now let's look at market from few more angles before I start using and demonstrating the latest releases of seasonality programs. Let's look at the mega caps. Now looking into market internals using Q global again, Q global market breadth. This is mega cap top 20 displayed to indecision at the top and then a bear release signal at upper boundary. It was at upper boundary for quite a long time, and I mentioned that Q guideline was not to take long trade. Long trade would be taken at swing low, not at swing high using Q techniques. That would be useful because last 2 days price came down. Yesterday, just like the market did, the mega caps also rallied near the end of the day. Is it time to buy? No, because the weekly has a railroad kind of pattern. An up candle followed by a down candle, which is displaying the bear release signal. This is not a time to start buying mega caps. Let's directly go to now market breadth total view to save time. That combines the insight from two composite indices, Nasdaq NYSE, and four major indices, S&P 1500, 500, Nasdaq 100 and Dow Jones. If we look at the MA calculations, percentage of stocks were 50 MA above 200 MA. We have weekly chart as usual and daily chart together. The 50 MA above 200 MA is above 80%. Percentage of stocks above 50 MA, it is around 65%. It is above the average line at a high level, but not as high as percentage of stocks where 50 MA above 200 MA. That is expected because the yellow line above 50 MA will drop first. Is it showing some weakness? Yes, we can see it is weaker than the orange line. And if we look at the white line, percentage of stocks above 200 MA, this total market breadth, that is also above 80% and above the average line. Those are very high. The stocks that were at very high point, much above 50 MA, they rolled over a little bit, but overall the market is very strong. I have added this 3-month new high, new low line, and you can see once it reached the extreme level, it pulled back a little bit. It's not at extreme level anymore. I added it after I watched Dr. Jeffrey's video, which I watch regularly, and he has observed that whenever this 3-month new high low, and remember this is again not on one index, this is on the 5 indices combined. When it reaches the extreme, it tends to pull back, unlike other overbought, oversold indicators that are running on single stocks like stochastic, RSI, or even Q stretch, overbought, oversold condition that may stay overbought, oversold for a long time, but this 3-month new high low does not stay at overbought, oversold condition too long, and that we see once again right after it went to extreme, it pulled back. When market is at so high level, we are looking for possible pullback. Now, no sharp pullback has happened in the market without a distribution count of at least 2. And though the market was looking weak for last 1-2 days, you can see at the right side right edge, there is no distribution count at all, none whatsoever. That is why I am not thinking the market will drop significantly. That may change if I have a distribution count of 2, but there is no distribution count at all. In the last video, I showed that only Nasdaq had some weakness, that also relative weakness in the internal studies, and let's just look at that before switching to another dimension. Look at the composites, that is Nasdaq as a whole, NYSE as a whole. I showed, and that weakness is still there. The percentage of stocks above 50 MA for Nasdaq, it is remaining below 50%. Remaining below 50%. And also there is a bearish divergence in percentage of stocks making new highs. That relative weakness was there in Nasdaq earlier and it is there now also. Now let's look at some other dimensions to assess market health. Let's go to Q edge. Now 2 days earlier I was watching this bucket analysis and I saw, not today but 2 days earlier, it jumped by a very significant percentage in the extreme bucket greater than 10. These are stocks that are above their normal range, and that percentage jumped by more than 10%, and I tweeted about it at that time on my Twitter page that a pullback was likely, and that pullback happened. Whenever you see the percentage of stocks in the extreme bucket jumps by 10% or more, that is the market going up by spending too much fuel. It may not be sustainable. It happened 2 days ago and I see it happen yesterday again. I think 3 days ago or 2 days ago it happened. Yesterday it happened again, not by 10% but by a very large percentage. From 6.6 it went to 14.7. So about 8% jump. Not 10 or 15 yet. Now I saw one interesting thing happening yesterday, that is, as you can see here, the percentage of stocks in the uppermost extreme bucket jumped and the percentage of stocks in the extreme lowermost bucket also jumped. That means the stocks that were extreme high, they are going up. Stocks that were at a lower price level are falling down. That is not bullish. When stocks are making relatively new high and also new low at the same time, while price it at all-time high, that is not a bullish sign. So there is something to keep in the back of our mind to think. First, the jumps in the extreme high bucket, it is approaching 10 or even more than 10%. Yesterday it was 8%. And the other thing to keep in mind that while at market top, percentage of stocks in the lower bucket jumped significantly, while the percentage of stocks in the highest bucket also jumped significantly. That is not a bullish sign. If we look at the useful 1 month to 1 day sector industry stock advance decline breadth, this is from QH. The 1 month period is bullish forever. 10 day, 5 days were bullish in the last webinar also. And at that time, 1 day, 2 day periods were bearish. And I remember mentioning in the last webinar that that happened several times. The 1 day, 2 days turned bearish only to recover to turn everything bullish again. Now we see the yesterday's afternoon market rally changed the 2 day to bullish. 1 day is still slightly bearish. We'll see how the market moves today, but this picture overall is still bullish. I'll not go into the other sector charts. Let's go to Finder to see the technical breadth. This is a very powerful study, the actual technical breadth of your trading universe. I'm using S&P 1500 and all liquid stocks. It has more than 2000 stocks. The weekly market breadth, technical breadth, is now slightly more bearish than bullish. 54% of all signals are bearish. Strength signals are bullish overall because of the large number of gap ups. And as I had mentioned many times earlier, large number of gap ups followed by bearish reversals is a bearish sign. Trend continuation is also slightly more bearish than bullish. There continues to be a non-negligible number of bearish headwinds in the weekly chart. That I am showing for last 3 webinars or so, 2-3 webinars. That is also a cautionary signal. The weekly picture overall is slightly more bearish than bullish. And yesterday's picture, in spite of the late market rally, we can see all signals are now bearish. Trend continuation bearish, strength signal bearish, and reversal signal slightly more bullish. That is because the market rallied from support. Dia and QQQ both had support. As they reversed from those memory supports, several stocks also reversed from their supports. Overall, this picture is bearish. One cautionary signal here that I mentioned in a recent webinar also is the price level of stocks that are giving bullish signals, Q technical signals, bullish. They are mostly coming from stocks that are at pendulum or price extreme high. That is a cautionary signal. Normally, when the market is in healthy uptrend, not at top, very top, then the bullish signals primarily come from yellow level, and bearish signals also come from yellow level, price level yellow or pendulum level yellow, neutral. For bearish signals, most signals are coming from the yellow band, but for bullish signals, 74% they are coming from extreme high. That is a cautionary signal. So we have multiple cautionary signals. We may be careful. That was my view in the last webinar also, though we saw stocks like CYH that you could identify, I could identify using 360 degrees analysis, they continue to do well. I have 20 more minutes or so. Let's now do different workflows using Q seasonality. We are in Q Finder. Let's start with Q Finder. The daily pattern is bearish. Let's look for bearish breakouts. So I went to the bearish tab and I am going to flag the bearish breakouts. There are 237 breakouts. By the way, this is Q Finder and it is extremely useful in doing multidimensional analysis, mixing, matching different Q setups and signals with the pattern you have in mind. Or you could look for trades with maximum number of bearish signals. You could look for trades in stocks that are dropping the most. You could look for maximum bearish signals not only today but over last 2 days or over the whole week. We have large number of bearish breakouts yesterday, 237. Let me try to reduce the number of stocks. Let's also look for stocks that gap down and then broke down, flagging against the gap column. So now I have 100 12 stocks. What is the pattern I am looking for? Gap down and breaking below trendline support. I see there are many stocks with bearish pressure. They gap down and broke down with bearish pressure. Let me go to those stocks. I have 22 stocks. I can see from the price extreme, 2 of them are at extreme high price level, and the remaining 20, because there are 22 total stocks here, they are in price extreme middle. The stocks that are breaking down from price extreme high may give lucrative shorting opportunities, and the stocks from price extreme middle may also give high probability trades. All of these are high probability trades if we confirm them, because we are aligning forces from multiple levels. If we are not comfortable shorting the top, we might look for shorting ideas from stocks that are in the price extreme middle, or we could look for the stocks that fell down most yesterday. And these are stocks that came down with pressure, gap down at the open, broke below trendline support. Or we could look for stocks with maximum number of bearish signals short by that. Now let's demonstrate the use of seasonality now. Instead of doing bottom up, if I did bottom up from here, I would probably go to either the chart or to fundamental analysis. But I want to now go to seasonality to see if any of these stocks have bearish seasonality in this month of May. I want to go to Q seasons, the multiple stock seasonality check program, so I could highlight the stocks of my interest, which would be all of these. Or if I am going to analyze all the stocks that are in the visible display here, I could put my cursor in the header column, and you will notice I have shaded the header column. Whenever you have a shade, then there is something expected if you position your cursor there, depending on which action button you are using. So I put my cursor in the symbol header, and I am going to click seasonality. Alternatively, I could also select the stocks by dragging and clicking and dragging. I could do both. I am doing the header selection, and see, because I am now trying to calculate seasonality of multiple stocks, Q will intelligently know that, and though I have both programs open, Q season and Q seasons, it will send the stocks to Q seasons. I hope so. Let's see. Yes, it has sent to Q seasons, and it is retrieving data from Refinitiv now. Give it a few seconds or minutes. By the way, in the Q seasons program, I have limited the number of years to 30 years, not 50 years. Why so? Because I looked at all the liquid stocks, all the S&P 1500 stocks in the USA market, and tried to retrieve as much data as possible from Refinitiv in real time. And I saw that only very few stocks returned 50 years of data, handful of stocks. Even if I use 40 years, only about 10%, 15% stocks return 40 years of data. Whereas if I choose 20 years, the percentage is very high, around 70%, and that gives a nice history to calculate seasonality. You could also set it to 30. If you set it to 30, still about 60% of stocks return historical data, enough historical data. Default, I am setting it to 20, and it is retrieved the data. Let's look at seasonality. These are the stocks in the list that have at least 10 years of history. If I reset this to 0 and click the refresh button, or if I click this button, reset, then it is going to show me all the stocks, irrespective of these are relatively newer stocks or not. Let me demonstrate that. Now I have all the stocks, and you can see the stocks that are coming in yellow color under number of years. Yellow color is less than 10 years and orange color is warning less than 5 years of data. Then the seasonality may not be reliable. That's why I like to look at 10 years of data. You could set 10 and refresh, or you could use these ready-made buttons for at least 10 years and at least 5 years. That is going to filter out the stocks that don't have at least 5 or 10 years of price. So let me use the 10 by default. And these are the stocks from my list. What list? The stocks that came down with pressure, gap down at the open, broke below trendline support, and has at least 10 years of historical data to calculate seasonality. In the month of May, I can sort by double clicking. I can see none of them have bearish seasonality. There are several stocks having weaker seasonality, weaker bullishness than some others, but none of them are red, magenta, or dark red. So none of them have bearish seasonality. So I am not able to align seasonality with these trades, which is fine. At least for my own trading, seasonality is nice to have. If the technical, fundamental, industry, strength, weakness are aligned, we don't need to have seasonality. And we can see that clearly. All these stocks have yellow or green seasonality for May, but see, all of these stocks are down significantly this month, and this month just started. And of course, we knew that because in Finder, we chose the stocks that came down with pressure, gap down, and broke down. So in any case, I demonstrated how you could look up seasonality of multiple stocks at the same time. Now, what if I wanted to check the seasonality of one stock? Which stock? Let's think about CYH. Why did I choose CYH? If you followed me on the website, you knew I shared it on the forum that it gave a bullish setup on this day. How was its fundamentals? Let me now do an analysis on CYH. By the way, AVGO, I wanted to show that when I took the long trade, fundamentals were very strong. Fundamentals don't change every day. So fundamentals were strong. I took a 360 degrees long trade in AVGO. I exited it with a small loss as planned, and also using the breakout setup, I recovered much if not all of that loss using a breakout short trade. That was AVGO I described earlier. Let's look at CYH. Aim is to show how to look up seasonality of a single stock. This is Community Health Systems. Its detail has been retrieved already. Now I am going to click the seasonality button, and because it is from Q Vital home tab, it is displaying the scorecard of a single stock. When I click seasonality, even though I have both programs open, by the way, I am demonstrating it to you, but in real life you would probably not keep both of them open. That is superfluous. You would have your workflow. Is seasonality your primary workflow? More important workflow aspect, then you will open Q seasons, because then you want to check seasonality of multiple stocks first before checking probably their industry rotation, checking their technical strength, etc. But if you are like me, where I check seasonality at the end, then you just keep Q season open. You could keep both open, but that is superfluous in my view. So in any case, CCYH, great valuation, great earnings growth, that is a 3-star fundamental buying candidate, had a short squeeze, great earnings quality, and see its seasonality. I am clicking the seasonality program and see it took me to the single stock seasonality checking program. It's ordinary share, By the way, you can use Q seasonality, both the programs, not only for stocks, but for stocks, ETFs, futures, financial futures, commodities, forex, anything that you want. And it retrieves the data. Let me read out the scorecard. So I am demonstrating different aspects. When I looked at Q seasons, I showed you the seasonality table of multiple stocks. You could in fact use these buttons to filter. For example, okay, let me come back to this. I had all these seasonalities in the breakdown stocks. I see some of them are bullish seasonality. You could click these buttons to just look at the most bullish ones. If I click cyan color button, there will be none because there was no stock with cyan seasonality. Okay, now it has no data. Now it has data only about CYH because I was looking for CYH seasonality. For that, let me go to the single stock seasonality. It is already up 12% this month. You will see a lot of useful information. Let me read them out. Now for the single stock seasonality program, I have set the default number of years to 30. That is not going to load the system too much. For the Q seasons program that can check multiple stock seasonality, limited to 500 at a time to reduce system loading, overloading. So Q seasons can check up to 500 stocks at the same time, and Q season is for single stock seasonality check. Because Q season is for single stock seasonality check, I have set the default to 30. You could set to 20 also. I have set it to 30, and for CYH you can see in this row how many years of data are there for different months and how many years it was up, how many years it was down. If we look at our current month, out of 20 years of data that was retrieved, 11 years were up, 9 years were down. That gives us a bullish seasonality of 55%. Not high enough, that's why it's yellow colored. The average row shows the average price performance in the month. In May, average is negative. Though it is up more times than down, the average is actually negative. Average in the years when it was up, that average is 6.2, and average when down, it's down by bigger percentage, minus 8.2. We would expect that because the overall average is negative. Now the years that were up in May, if you look down, the ones with nice heat map shading, those are the years where it was up by bigger than average percentage. So average when up was 6.2, and you can see these years went up by bigger than 6.2%. 8.2, 10.2, 15.5, 9.6. By using these shadings of cells, you can instantly see which years went up by bigger than average percentage and were they big jumps. They were sizable jumps for a month: 8.2, 10.2, 15.5, 9.6. And the red shaded cells are showing the years where it went down by bigger than average went down. Average went down is about 8.2%, 3%. And you see these years it went down by minus 22, minus 14, minus 9, minus 10. So instantly we get the statistics here. Interestingly, this has no bullish seasonality, but see, the stock went up very nicely and hit the profit target. I think it covered the risk distance already, and in overnight market it is up again. That also explains why I don't start with seasonality as my first choice. If I do that, I will miss a lot of trades, whether it is AVGO bearish trade, bullish trade, or CYH bullish trade. Many of the trades you will miss. AVGO I didn't check seasonality, but for CYH it is clear that you would miss the bullish trade if you started with seasonality as your workflow. Now, if I didn't have the single stock seasonality program open, let me close that. Let me check the seasonality of a stock in the India market. By the way, all these programs, Q Edge, Vital, Index, Global, Q Season, Finder, everything is applicable to global markets. I do invest in multiple countries, not only USA, not only India, few other markets also. Now, I was sharing an idea with some traders on this stock. If I remember the Reuters symbol correctly, Sriram City Consumer Finance. See its technical charts. You will see a similarity between this trade, some similarity between this one and CYH in the USA market. What similarity? Right on this day, this stock, Sriram City Consumer Finance stock, it held on to the yellow direction line. White direction line was below it. It was in an uptrend with higher high, higher low, pulled back to support, went up. That gave a pullback long setup. And the flow was bullish, so it was also a good flow setup in the daily chart. It had bullish pressure U-turn. So I identified it on this day, and just like CYH in the USA market, it has covered the risk distance nicely, though we saw the India market is moving sideways, very similar to CYH in the USA market. And why did I choose the stocks if the fundamentals are still coming? But that is fine. Let me check these stocks seasonality. Okay, fundamentals has come now. Let me complete that. Great valuation for this Indian stock with earnings growth in the last quarter against a 3-star fundamental candidate, just like CYH. The same technique that you apply to USA market, you can apply to other markets and vice versa. Now see why I came here once again to demonstrate the integration between different programs. I am on this stock and I have closed the Q season single stock seasonality checking program. If you had multiple stock seasonality checking program open only like I have now, Q seasons, I'm going to press the seasonality button. It will take the single stock to the Q seasons program. Once data is retrieved, the status is shown here. One symbol, one success, 0 error. We could click the cloud season icon to go to the same seasonality tab. Now see here, it knows I have only one stock, so it didn't send me to it didn't take me to Q seasonality score for multiple stocks. It directly went to the detail. So these systems are not only integrated, they are very intuitive, and they knows probably what a trader is looking for and takes us there to the extent it can. Now once again you can see this stock made excellent profit, but see the seasonality in May. It is not great. It's just yellow. If it is yellow, neither green nor red, then it is neither here nor there. We cannot rely on seasonality when the seasonality is only 50 or even 60%. Preferably it has to be cyan at or above 80% or magenta at or below 20%. So in this case, again, the seasonality was not there. Still the trade could be taken and hit profit target already in a few days. That is why again I am saying that I don't want to use seasonality as my starting point. then I will lose a lot of trades, including CYH, including this stuff. I am sure you will love the program. Feel free to give me your feedback. All of these are now available for the traders, complimentary for all Q traders, complimentary for life for all Q traders who are using Edge Vital Index. I'm sure you will love it. You may go to your personalized download page, download the seasonality programs, but probably you will run only one of them depending on your preferred workflow. You just need to extract the file and put it in your working folder. Which folder? The folder where you have Edge Vital Index. Then everything will start working for you. Let's end today's session here. The market is looking toppy. However, it is not bearish. There are several warning signals. We saw them from multiple angles. We saw the warning signals from Finder in non-negligible number of bearish headwinds. In the weekly interval, we saw the warning because large number of bullish signals are coming from stocks that are already at price extreme high. We saw the warning signal from the sudden jump in extreme high bucket, and also at the same time the sudden jump in the extreme low bucket. And that is about all where the weakness stops. Overall, the market continues to be bullish. There is no distribution count, so I am not overly concerned yet. We'll see how the market does. You are always able to find Q360 degrees trades in whatever market we are in, as I showed. Let's end today's session here. Thank you for joining. I look forward to seeing you in our next session. It will be during the weekend. I'll announce the time on Twitter, the Twitter handle, and if you are subscribing to the YouTube channel, you will come to know that, not know about the live session from there as well. Thanks once again. Keep safe, and as I always say, no reason not to do that. Trade profitably.